All right, hi guys. Welcome back to our weekly trading forecast for the week of 22nd of June to 26th of June. So my name is Dylan here, and right here is JJ. So let's kick off as usual with the dollar index first. So I'm gonna share my screen here. All right, so this is the dollar index, and this is, let me change to the daily charts. Okay, so all right, so in the day charts, the first thing I want to talk about is that uh, previously there was a rising trend channel, okay, a rising channel right here. Price has broke below the channel as of now and is actually trying to pull back towards the bottom of the channel. But in any case, we have to understand that the dollar is definitely starting to weaken. The recovery, or rather rebound right here, is not as strong as when it actually started to fall. So, in my opinion, right now the pullback, or rather the uptrend, is actually just a pullback of this entire falling trend. And if we look at the monthly charts, all the way to the monthly charts, if let's say in the month of June, the price actually went down, closed with a bearish candle, and of course it closed below this rising channel, then definitely on the technical point of view, dollar is going to turn bearish from July onwards. So we still have to see and observe. Uh, just hope that it doesn't close above or within the channel, because that's going to cause another confusion from here onwards. Okay, so let's just see how it goes. But if we were to take that into consideration and taking this current uptrend is a pullback, then we will have a case to look for opportunity to sell the dollar again. So in my case, I can see that within this zone itself is a important zone, all right, for us to look for opportunity to sell, because this is the zone where price was being supported, and when it broke below, it becomes a level, an area of interest to sell again in this zone. And what's more is that the pullback, okay, initially it pulled back the first wave, went into a consolidation. In fact, it's like I think it's like something like a triangle. If I were to draw a triangle right here, okay, you can see that price has been trading within this ascending triangle, and there is a little bit of break above right now. So in this coming week, I'm expecting that the price may continues to pull back further, okay? But very soon as it enters into this important supply zone, we can definitely look for an opportunity to sell the dollar index again. All right, so I'm not a fan of being bullish on the dollar, so I'm not going to try to buy. Um, I'm just going to wait for the price to enter this level and to see if there's any reversal signal for me to start selling the dollar index again. Of course, other than that, you can always pull a trend line, okay, right here, and then you will have a very more clarity in terms of which level to sell the dollar index. All right, so that is the for the dollar index. Next, I just want to straight away touch on the Dow Jones, okay, the US stock markets. As we know, recently the Dow Jones has started to fall again, okay, due to a increase in the COVID cases in the United States. In fact, based on my last check, the COVID cases in US has been increasing for the past 5 days, 5 consecutive days, and it broke above. It's more than 30,000 right now in terms of new cases. So. Uh, there's a very high possibility that in this coming week, when the market opens, Dow Jones might get down quite significantly. So just be very wary of that. In fact, last week I have already a call for a trade for a trade to sell the Dow Jones as it pulls back to this level. Okay, really somewhere at the top right here. because there is a technical formation to do so. If you understand about harmonics, this is definitely a very a pattern that we can focus on, right? This is actually a bet for a bearish bet, but what you can see is that it didn't actually reach 88.6. You only reached somewhere at 80%. And the reason why I actually shorted, even though it did not reach 80.6, is simply because based on experience, Dow Jones always reacted faster, or rather reacted before the completion. Like, I don't know, JJ, if you remember, previously there was a cipher pattern for Dow Jones as well. And before you reach there, it started to drop. So that gives me an experience of it, and it happened again this time around. Okay, and of course, mainly it's because of the fundamental. And we also know that the Federal Reserve is going to keep rate low and unchanged all the way through 2022. So the recovery is not going to be that easy. And also for the, I think 2 or 3 days ago, there's a news release that says China, Beijing, okay, is going for a second wave of COVID cases of this coronavirus. So it's really affecting the market again on a global level. And therefore, I believe the global stock market is going to fall again. And this is what I've been talking about, the second wave of the entire, or rather the crash of the stock market. So definitely in this coming week, I'll be focusing to sell the Dow Jones. So what you can do right here is that you have to wait for the pullback. But I think the first thing is one to observe if the drop is going to be strong or not. If it's going to be strong, okay, it confirms the case that the stock market is going into a second wave of a crash. Then we can be very sure that we can continue to sell. All right. In terms of the levels, I think if this continues on, okay, definitely bare minimally we are looking at the previous support right here at about 23,000. Okay, and whether it can fall even lower, I guess we still have to observe. I just think that this area really looks very similar to this area itself. It looks very similar to me. If this is going to happen, I think there will be more room for depreciation for the stock market, but probably it won't be that strong, or rather too extensively, because the government is already stepping to hold the price from crashing too fast or too furious. All right, so that is for the Dow Jones, and with that, I want to pass my time over to JJ.
All right, first for this week, we'll be looking at euro dollar. As you can see, the previous few weeks, it has been on a very strong uptrend before finally getting resisted at the top here. And this week has confirmed that this resistance has held and it started on its retracement. So as we can see previously on this downtrend, the retracement went back to about 61.8%. So if we plot the Fibonacci here again, 61.8% coincides with this demand zone here. So on the smaller time frame, we can see that there is still quite some space for downside. But just to be more safe, because price has just entered a demand zone here, we could confirm more room for downside by waiting for price to close below and awaiting a pullback before selling euro dollar. And if we do manage to get a short position at this price, we could look all the way back down to this demand zone here. And next would be pound dollar. As we know, this week pound dollar has been quite bearish. It got resisted at the top of this supply zone here. It came back down into this rising channel before nearing to the end of the week. It broke below this rising channel, and on Friday on closing, we can still see that it's actually quite bearish. And as we can see that price is going down really fast, if we want to sell pound dollar, we have to wait for a short range pattern similar to the one that just happened here before shorting the pound dollar. And the next levels of support would be this zone right here, and also this this would be the 3 years demand zone that is at the level of 1.2. So if price manages to break past this level, we could definitely look at this level to buy the pound dollar again. Of course, to keep in mind, we also have to watch the dollar index to see when the dollar actually turns bearish. So yeah, this would be my two analysis for this week.
All right, thanks JJ for your sharing. All right, I'm going to go back to my screen right here. All right, up next, I want to talk about the gold. Okay, so for the gold, if we were to look at the day charts, of course, just a reminder is that it was actually in trading in the rising channel, as we can see. Oops. All right, and right now the price is, let me just adjust it a little bit. Okay, so right now we can see ever since the price reached the top of the of this rising channel, we have seen the price going down and up, but end of the day is what's really happening is that it's just trading within this huge range. All right, and of course we have not seen the price coming all the way back down to the bottom of the channel. And since the gold is still trading within a range, which also means say that we still stand a chance to sell the gold when it reaches the top of the range again. All right, so that is one thing I'm looking at, but we want to be really careful about this. You see, because right now the risk sentiment is increasing, demand for safe haven currency asset is also increasing at the same time, and that's also why last Friday, when the COVID cases in US has been rising, has been confirmed. The gold actually went up and Dow Jones actually came down. I think that is very straightforward. So we want to be careful because I think gold will still have there's still room for gold to continue to climb if we were to look at the monthly chart itself. Okay. I mean, there's strong resistance at the top, but definitely there's still room for appreciation. And I want to bring you guys all the way back to 2008, okay, during the financial crisis. You see, after the financial crisis, the price went all the way down, came all the way up, got resisted somewhere near the top, just like what we are seeing right here. Okay, but eventually, it still broke higher. Okay, so this is why I think that gold will still have room to appreciate during this period of time, and there's also definitely a possibility gold may break new high, I mean historical high, in a few months to come. But anyway, if we are focusing on what's happening right now, short term wise, yes, we can still look to sell if the price were to get resisted at the top zone right here, okay, from the highest price to the current resistance level right here. So that's between 1,750 to 1,765. And of course, that also, I mean, one way I used to observe the entire uptrend of every trend itself, okay, is sometimes I will just look for one prominent trend and can just shift it around to see if this entire volume fits with most of the trend itself. So you can see this is actually quite the average of it. And if this is the measurement, then definitely we will have an opportunity to sell as it reaches the top based on this measurement. Okay, so there's the short-term outlook. But if not, right, if we want to continue to buy the gold, definitely right now there's already an opportunity to do so, because in the 1 hourly charts, obviously we are seeing that price is being supported, okay, by a rising trend line, and low are getting higher. The high is finally getting higher at the same time. So definitely there's a case for us to continue to buy the gold. So again, we have to see what happened when the market first opened. If the market were to gap up, okay, and you start to see a strong pullback, then definitely we want to look for opportunity to buy the gold again at this breakout level. Okay, if not, we'll just wait for the price to pull back even further. okay, back to somewhere right here, the previous resistance right here. Okay, you can see there's a small demand zone right here as well. Okay, that's between the price of 1,735 to 1,733. That's another level that we can look for to buy to go again. All right, so fundamentally speaking, because gold price is really high right now, which is why I'm quite careful with buying. But at the same time, on the fundamental level, we also know that there's a strong demand for safe haven assets. Yep. So that is what we want to do with the gold. All right. And last but not least, I just want to share about Kiwi against US dollar. Because coming this Wednesday, the Reserve Bank of New Zealand is going to announce their interest rate decision again, or rather the cash rate decision. And what happened last month, if I'm not wrong, is that they increased their bond purchase by 30 billion. Is that right? Let me check the figure again. Yeah, by 33 billion. So now it's 60 billion right now. And I think in April, or rather in March, they actually cut their interest rate again. So, no, in fact, that was, yeah, correct. That was in March and May as well. March, only March, yeah, March, they cut interest rate. So, I think this overall points to a weaker Kiwi dollar, points to a weaker Kiwi. And also recently what happens in Beijing is definitely going to impact on the economy of New Zealand and Australia as well. So in their coming in cash rate decision, if they were to continue with a bearish or rather a dovish stance, then I think Kiwi dollar will continue to fall from here. If you look at the Kiwi dollar right now on the chart, okay, firstly, let's look at the weekly charts. If you look at the weekly charts, if I were to pull a falling trend line from here, okay, you can see that price is being resisted by this falling trend line in the weekly time frame, and it has started to reverse. Okay, and if we go all the way into the 4-hourly charts, the recent uptrend, okay, has been broken. This rising trend line has been broken. Price pull back and started to fall again. But right now, we can only consider it as a ranging. So therefore, for this week, right, there's two ways we can go about it. Number one is if the price were to pull back again, then we want to look for opportunity to sell in this supply zone. So that's between 0.6485 to 0.6520. Okay, this is the level that we can do to sell again. But if let's say it did not pull back at first and it started to break lower, we will wait for the announcement of the cash rate, and if that causes the price to pull back, and as long as it's either dovish or at least it's not going to be what you call that, hawkish at all, okay, then we can wait for the pullback back to this breakout level and to look for opportunity to sell again. In short, we want to sell the Kiwi dollar. We want to continue to sell the Kiwi dollar because there is really a lot of downside for us to sell. And bear in mind the previous two uptrend, okay, definitely has a AB equals to CD formation, and therefore I think it's just right or reasonable to say that there's still room for the price to fall at least back to this trend line. Okay, so that is why I want to talk about this Kiwi against US dollar. All right, so with that, I've come to the end of this trading forecast. So thank you for watching, and we will see you again next week.